While residential property has been a well-publicised beneficiary of pandemic-driven price growth, so too has rural property. For rural property, a lot of the drivers of growth are very similar to residential. Low interest rates, easy access to finance, and of course high savings rates. Rural property, however, has also benefited from very strong increases in agricultural production, increases in commodity prices, and of course the search for space that typified the pandemic. This month we take a look at what's driving the sector in 2022. The first is that Australia hit record agricultural production in 2021, and it does look like this momentum will continue this year. Across Australia, all commodity types did well, helped along by very good weather conditions, and conversely, far poorer weather conditions elsewhere around the world. We also saw far fewer COVID infections than elsewhere around the world. As a result, our agricultural production didn't slow down to the same extent. Australia's highest value commodity items are currently beef and wheat, and both of these had bumper conditions last year. At this stage, it does look like it will continue. The second trend we're seeing is that high commodity prices are also pushing up house values. Agriculture has been a very strong driver of economic growth, and that has flowed through to both house price growth in big cities but also in smaller towns. As an example, the West Australian wheat belt produces more wheat than anywhere else in Australia. Since the start of the pandemic, strong wheat growing conditions and higher prices have driven house prices in the wheat belt by 31%. Like wheat, beef producing areas have also done well in terms of house price growth. The Queensland outback, where the highest number of cattle live in Australia, saw house prices increase by 40% since the start of the pandemic. Overall, the outlook for commodity prices does remain strong, as does the level of production. The biggest challenge for now does remain access to labour, particularly for the horticultural sector. While high commodity prices have driven house price growth, it has of course also driven up the price of farms. Over the past 20 years, the price of farms has risen from $1,000 a hectare on average across Australia to $6,000 a hectare. Like most property types, COVID has driven up pricing for farms. Low interest rates, easy access to finance, high savings rates, and of course some very good agricultural conditions have helped things along. For now, the majority of buyer demand for farms is coming from local buyers. The proportion of foreign-owned properties has increased only slightly over the past 5 years, from 13.6% of total land to 13.8%. The reopening of international borders and of course some very strong agricultural conditions is likely to lead to higher levels of interest coming from overseas. The outlook for farm prices does remain strong. Value increases are expected to come from continued strong demand, increasing profitability, high commodity prices, and also a concentration of ownership. With fewer properties coming to market, there is less to buy, and this will create greater competition for farm. The fourth trend is that weather conditions for agriculture are expected to remain favourable, at least in the first half of 2022. High commodity prices at the moment are being driven by very favourable weather conditions in Australia and less favourable conditions overseas. Weather conditions are of course out of our control, but the agricultural sector is of course highly dependent on it. It is therefore good news that the Department of Agriculture, Water and Environment does expect high levels of rainfall in the first half of 2022. This will generate favourable conditions for summer crops and also pasture. On the flip side, the forecast is for far less rainfall in many of the areas that compete with us for agricultural production. Good weather in Australia and poorer weather elsewhere does mean that we will see elevated pricing at a time at which we can produce a higher level of agricultural items. The fifth trend impacting the market is the continuation of supply chain disruptions. Supply chains are stuck, driven by 2 years of relatively low levels of activity and a global economy that is now coming back to life. This is making it more difficult and expensive to ship items into and out of Australia. This is flowing on to prices and may trigger an earlier than expected interest rate rise. For the agricultural sector, it is challenging at many stages of production. It does increase the cost of major inputs such as fertiliser, and for goods such as horticulture does make it far more difficult to ship. At this point, it is very difficult to predict when supply chain issues will be resolved. The best predictions at this point is that they will continue into the second half of 2022. The final trend for rural property is that lifestyle properties will remain in high demand. While a strong agricultural sector has driven up the price of farms, so too has demand for lifestyle properties. We have never seen so much movement of people out of capital cities into regional Australia. A lot of this had to do with the search for space. With people locked down, bigger homes became more in demand. We've also seen Australians hit a record level of wealth, and this has allowed them to buy bigger and better properties at lower interest rates. The demand for holiday homes has also been strong, primarily because Australians haven't been able to travel overseas. Last year, the regional areas that saw the strongest price increases were in regional New South Wales, although Sunshine Coast and Gold Coast also made the list. Of all regional areas, Southern Highlands and Shoalhaven in New South Wales saw the biggest jump in median house prices over the past 12 months, increasing by $320,000. Berrimah saw an increase of more than double that to hit a median of $1.8 million. Other areas that not only contain a large number of lifestyle properties but also saw significant increases in median house prices included Richmond Tweed, particularly the Byron Bay hinterland, as well as the Hunter Valley. This year, demand for lifestyle properties is set to continue. However, price growth is likely to be a little bit more subdued in line with what we're seeing in capital cities in 2022. We're proud to present real-time insights to help you on your property journey. For more information on rural and lifestyle properties, head to raywhite.com and download the Ray White Now report.